something we've been focused on digital currencies for, a couple decades. This is something we've been focused on digital currencies for, a couple decades.
What we recognize is that digital money is now part of the way the economy functions. We have to differentiate between central bank digital currencies that are backed by the state and stable coins and crypto assets that are privately issued. In that world of private issuance, there has to be more regulation. We now recognize that we have been a bit slow as a global community, and therefore the Financial Stability Board, the International Monetary Fund, Bank for International Settlement, we all have committed to work hard to present foundation for regulation. The IMF just days ago discussed this issue at our board, and what the conclusion is: first, crypto assets are not money. They cannot be accepted as a legal tender. Second, there has to be a very strong push for regulation. And third, if regulation fails, so if we are slow to do it, then we should not take off the table banning those assets because they may create financial stability risk.
Bitcoin on your balance sheet, how much is there right now?
Over $130 million of Bitcoin on our balance sheet as of the end of the year, with a fair market value being above that. Ultimately for us, this is a long-term, potentially transformational initiative to build utility into the Bitcoin ecosystem. We believe the internet needs a currency that will help bring down inefficient costs in the system that exists right now, particularly for underserved consumers around the world and in emerging markets. So our focus here is on the ways in which we can help build resilience utility into the Bitcoin ecosystem. But we're doing that in a disciplined way.
Sam Bankman-Fried didn't like Bitcoin. Why didn't he like it? Completely decentralized, transparent. He couldn't control it. FTX and Celsius and 3AC, completely opaque and centralized. Those were the companies that went under. The blockchains, whether you're talking about Bitcoin or Ethereum and many others, they didn't skip a beat. Transactions did not stop. And I think that has given us a lot of confidence that actually they're on the right track. We think there are three revolutions taking place simultaneously. There's the money revolution, which is mostly Bitcoin, a bit Ether. There is the financial services revolution, which is Ethereum, as is this notion of digital property rights. First time. That's Web3. Digital property rights. With an economics background, I know that the best way to lift people and countries out of poverty is to give them immutable property rights. And we think that Web3 is all about bringing digital property rights into this new world.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And we have the IMF at G20 speaking about crypto regulation. And guys, we know regulation is definitely going to be global. And remember, crypto barely has $1 trillion market cap. And at the G20, it's a topic. And the reason why is because it's the future. It's for the fourth industrial revolution. And we know internet needed currency. And now the robots, algorithms, and drones can pay each other. And we have Cathie Woods on Bitcoin and crypto. And she breaks it down, currency, utility, and then digital property rights. And guys, we know digital property rights is basically selling your data. Everything is going to be for sale. Your social media, your email, your biometrics. And she talks about the fourth industrial revolution and the new world order. And she talks about Elon Musk Tesla event March 1st. But guys, we know the autonomy is definitely around the corner. And she's talking about all the driving data that they have. Cutting costs. Guys, how are they going to cut costs? Because humanity is going to be taken out of the workforce. And that's where deflation comes in at. Remember, I brought you a video like 2-3 years ago of Ray Kurzweil talking about deflation in the economy, where the price of houses will be $25,000 to $30,000 apiece. And right now it's hard to see when you have houses on the average about $400,000, but that was all due to the Fed, so they could continue on printing money so they could buy up the globe. But now that they're finished, everything's going to be going back down. And remember, the crypto teacher told you. And then we have Jim Cramer on the yield curve saying it's wrong. Guys, we know the yield curve has never been wrong. The inverted yield curve has been 100% correct when it's talking about a crash. And we know that crash is right around the corner. So if we know a crash is around the corner, we know that crisis is right around the corner. And remember, the crypto teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
AI is really the mover and shaker here. It is going to catalyze more innovation because it's at the heart of the convergence between and among technologies. So autonomous taxi platforms, and I know Tesla's going to be talking probably a lot more about this now at its March 1 Analyst Day. Autonomous taxi platforms are the convergence of three major innovation platforms: robotics, energy storage, and artificial intelligence. Those are three different S-curves, and they're going to feed one another. So we think it's going to be pretty explosive. Some of the stocks we have in the portfolio, the top 5 that Bob mentioned at the outset, they have proprietary data, including Tesla, like billions upon billions of miles of real-world driving data that nobody else has. Most of our companies are going to be sleepers because of that proprietary data. ChatGPT, if you've been reading about it, is really scraping the internet from all its history for information. It is the proprietary data that companies have that's going to make a difference. And the other thing that AI is going to do, I think the killer app, is cutting costs and increasing productivity dramatically. So pretty exciting.
Virtual world, what will value be? Like, because you're talking about that the price of everything drops, and you can sort of, whenever the whole world is digitized, you could just...
Well, it's for proprietary forms of information. I mean...
These technologies are deflationary, but it's good deflation, because when you cut costs and cut prices, you increase unit growth. So we think we're going to have some explosive unit growth trajectories during the next 5 to 10 years. And in fact, we think that if economic statistics were measured correctly, unfortunately, they're a product of the industrial age, not the digital age. If they were measured correctly, we think we would see much higher real growth and lower inflation because of these technologies, to do with the tech and telecom bubble and bust, and people fearing that we may be in the same situation. We are not. In fact, the seeds for everything that's happening today, all of the innovation that's happening today, they were planted in the 20 years that ended in the tech and telecom bubble. But the technologies back then were not ready. The costs were way too high. We didn't get the big breakthroughs in artificial intelligence until deep learning 2012, transformer technology 2017, and now finally we have a ChatGPT. People are beginning to understand that the ground is shifting underneath us when it comes to innovation. Unlike in the late 90s, investors rushed into the late 90s, weren't ready for them. Now they're running away. They really are running for the hills. And what are the hills? They're benchmarks. That's where they think safety is. But if we're right, the benchmarks, which represent the traditional world order, are going to be disintermediated, disrupted by the most massive innovation period in history.
At least we got a bounce where interest rates are down on that durable goods number. But I'm kind of with them in the sense that I think that the market's trying to reprice the fact that the Fed's not done. The Fed said it wasn't done. I don't know why people felt the Fed wasn't done. One of your guests said that the 10-year's really wacky. I forget whether it was Eisman or not. That the 10-year's really not a good piece of paper. And I'm totally agree with that. I think it's a terrible piece of paper because it's pricing that the Fed reaches some level where it's happy, where we have a real slowdown, and then that's going to be a good piece of paper versus all the cuts we're going to have. That's just fanciful. So I think we're trying to undo that mistake of the yield curve. I know a lot of people think, Becky, that the yield curve can never be wrong. I think it's wrong a lot, and it's really wrong right now.
Yield curve just in terms of the inversion being wrong?
Well, I mean, yeah, what the hell's the 10-year doing at 3.9? I mean, honestly, why do you get, who feels compensated for 10 years at 3.9? But you have to just take issue with the fact that you could be at 5% out a year and 3.9 out. I mean, I know that inverted yield curve speaks loudly about a recession. Well, no, it's just sometimes it's really wrong. It's really wrong right now.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
It's Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID 33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.